This question is testing the preparation of stores ledger card. And the question is from ATD level 3. It reads as follows. XYZ Limited deals in purchases and sales of hardware products. The company recorded the following transactions in relation to product JL40 during the month of September 2018. As you can see, we have the date of transactions, and then we have the purchases, which are related to the receipts. Those are receipts. The purchases are for the receipts, and we have the sales. These sales are related to the issues. In the additional information, we told that the opening stock of the product JL40 on 1st September 2018 was 7,000 units purchased at 27 per unit, 27 shillings per unit. On 9th September, the company reported a shortage of 400 units. On 20th September, 1,000 units sold on 15th September were returned by a customer. Operating expenses for the month of September 2018 amounted to 250,000. We are required to prepare the stores ledger card for this particular company using the FIFO method, and also prepare the income statement for the company in the month of September 2018. To answer such a question, you are required to understand how to prepare the stores ledger card. As illustrated before, that stores ledger card can be prepared using a number of methods. The most commonly used methods to prepare stores ledger card are the first in, first out, first in, first out, and this is known as the FIFO method. FIFO method. Another method is the method known as last in, first out. Last in, first out. And this method is known as the LIFO method. That is the abbreviation. Another common method is known as weighted average cost method. Weighted average cost method. So these are the most common methods. To explain these methods briefly, before I answer the question, is that if we are using the FIFO method, the main assumption is that the price of the first batch of inventory in the store is the issue price, which is used to issue the items up to a number of units the same as the number of units in that first batch in the store. Once all the units in that first batch assumed to have been exhausted, then the price of the next batch becomes the issue price. So the first batch in the store gives the issue price. Gives the issue price until the units in the batch are exhausted. Until the units in the batch are exhausted, then the price of the next batch becomes the issue price. The price of the next batch is used. That is if we are focusing on FIFO method to value inventory. Another method that is used to value inventory, as I've said up there, is the last in, first out, and that is the LIFO method. And this method works in the reverse of FIFO method. That is, instead of the first batch being used to give the issue price, it is the last batch in the store or the latest batch in the store in the store or gives the issue price until all the units in the batch have been issued. Until all the units in the batch are exhausted. Then price of the next batch or price of the previous batch is used as the issue price or to value any issue from that particular store. In the third method, which is the weighted average method, weighted average cost method, what is happening is that every time an item is issued to be used in manufacturing or to be used or to be sold out, the item is valued at weighted average cost of the units in the store. So that means every time weighted average cost need to be determined or weighted average value need to be determined. So the weighted average cost is determined as the weighted average cost equals to total cost of available inventory divided by total number of units. Total number of units in the store. So number of units available. That is giving us weighted average cost. So every item issued is valued at that weighted average cost. To answer the question at hand, we will focus on first in, first out method. First in, first out method, the FIFO method, as follows. We prepare a source ledger card as required by the question in number 1. And this product is called JL40. So this is a source ledger card for JL40. So the source ledger card has the date, a column for receipts, a column for issues, and then the balance. And to answer the question, we will start by the opening balance, which you have been told that at the beginning of September, on 1st September 2018, the opening balance was 7,000 units, which were purchased at 27 per unit. Now we determine the total of that by having 7,000 by 27 equal to 189. So at the beginning, that is on September 1st, the first transaction on September 1st is actually a balance of 7,000 units. It is 27, a total of 189,000. Then the second transaction is on 2nd of September. And on 2nd of September, the company acquired 10,000 units or purchased 10,000 units at 30. So we have 10,000 at 30 each. And 10,000 by 30 is equal to 300,000. That is the amount which we add. We update the balance after every transaction. And in this case, if we are updating the balance, then we are going to have 10,000 plus 7,000. 10,000 plus 7,000. We need to add this 7,000 plus this 10,000. That is for the units. And if we add the two, we're going to have 17,000 as the total now. 17,000. Also add the amount, which is 300,000, add 189,000. So that we're going to have 489,000. The amount is going to be 489,000. That is the first or the second transaction on second. The third transaction is on 4th of September. The company purchased some 6,000 units at 32. 6,000 at 32. And that is going to give you a total of 192,000. And we update the balance again by adding 6,000 to 17,000. That will be 23,000. 192,000 you need to add to 489,000. That is on the amount column. And we get 681,000. 681,000. Now that is on 7th, on 4th. On 7th, the company sold 10,000 units. That means issues. They issued 10,000 units. And because we are using FIFO, we are preparing this toast ledger card using FIFO. We are going to consider first in, first out in this first issue. So we're going to have on 7th, the company issues 10,000 units, which will be issued as follows. The first issue comes from the first batch, and the first batch had 7,000 units. This is the first batch, as you can see here. That was the balance brought forward, or the balance at the beginning. It's the first batch. So from that first batch, we issue 7,000 units. Therefore, the first issue of out of the 10, we're going to issue 7,000. And the 7,000 each is equal to 27, which was the price of each unit in that first batch, a total of 189,000. After every issue, we need to update the balance by deducting. So we are going to deduct 7,000 from 23,000 so that we have 16,000 as the remaining units, and subtract 189,000 from 681,000 so that we're going to have 492,000 as the remaining amount, or the value of the remaining units. Next, we need to issue 3,000 more. And for us to issue 3,000 more, we're going to issue the 3,000 from the next batch in the store. And the next batch in the store is this batch, which was having 10,000 units. So from the batch of 10,000 units, we can issue 3,000. From the batch of 10,000 units, we can issue 3,000. So we have an issue of 3,000 units, each equal to 30 shillings. Now 3,000 by 30 will be 90,000. Now we deduct 3,000 from 16,000 so that we have 13,000. And deduct 90,000 from 492,000 so that we have 402,000. That is about the issue on 7th. And once we have issued that amount on 7th, the next transaction is in the additional information number 2, which is on 9th September. We are told that on 9th September, the company reported a shortage of 400 units. So we need to remove 400 units. And even as we remove the 400 units, we need to consider FIFO. We need to consider FIFO. Right, so we are going to have 400 units. And we have at 30, 400 units at 30. And 400 by 30 equals to 12,000. Equals to 12,000. Then we deduct so that we have 12,600. And we deduct so that we have 390,000. 390,000. The next transaction is on 12th. On 12th, the company purchased 8,000 units at 31. That is a receipt. So on 12th, a receipt of 8,000 at 31. So we have 8,000 by 31, which should be 248,000. 248,000. Now add 8,000 to 12,600 so that we're going to have 20,600. And add 248,000 to 390,000. So that we have 638,000. Right. The next transaction is on 15th, which is that is an issue. So the company issues 3,000 units on 15th. On 15th, 3,000 units are being issued. And as we issue 3,000 units, we consider that this batch of 10,000 was still remaining with some units because we have already so far removed 3,400 from that batch. 3,400 from that batch. That means we still have a total of 6,600, remaining 6,600. So from the batch of 10,000, we have 6,600, which we can use to issue 3,000. Therefore, we are going to issue 3,000 units. Each equal to 30. So 3,000 by 30 equal to 90,000. Then deduct 3,000 from 2,600, and that will be 17,600. Deduct 90,000 from 638,000, and you will be able to have 648,000. 648,000. On 17, there is another issue of 6,000 units. So issue 6,000 units. As we issue 6,000 units, we are going to issue the 6,000 units as follows. From the batch of 10,000, we are now remaining with 3,600. So first issue 3,600. From this batch of 10,000, we can only issue 3,600, after which then it becomes exhausted. Each equal to 30. So if we have 3,600 by 30, that will become 108,000. And then deduct 108,000. Start by deducting 3,600 from the units, so that we have 14,000 remaining. And 108,000 deduct from 648,000, so that you have 540,000 remaining. The next transaction is still on the issue of 6,000, because we have only issued 6,000 when we are supposed, we have only issued 3,600 when we are supposed to issue 6,000. That means then we still need to issue 2,400, and we are going to issue that from this batch, the batch having 6,000 units. From that batch of 6,000 units, we can issue 2,400. And each unit is equal to 32. Now, 2,400 by 32 is equal to 76,800. We go ahead and deduct 2,400 from 14,000. So that we remain with 11,400. And subtract 76,800 from 540,000. So that we have 463,200. 463,200 as remaining. Now, with that, then we can be able to proceed to the next transaction, which is on in the additional information number 3. In the additional information number 3, we told that on 20th of September 2018, 1,000 units issued on 15 were returned by the customer. Now we look at 15. On 15, there were issues of some units. And as you can see, these units were issued at a value which was equal to, the value of that issue was 30. So this is the transaction. We issued some 3,000 at 30. So 1,000 of these units have been returned, and we record that return as a new receipt. So we shall record as if a receipt was made on 20th. So on 20th, therefore, we receive 1,000 units. Each of those units is valued at 30. That is the price at which they were issued out. And that will become 30,000. Now add to get the total, so that the total units are going to be 12,400. And the total amount is going to be 493,200. The next transaction after 20th should be on 24th. On 24th, received 10,000 units at 28. So there is a receipt on 24th of 10,000 units at 28. That should become 280,000. Now we determine the total by adding 10,000, so that we have 22,400, and also add 280,000. We need to add to the total which was there before, which is 493,200. And that will give us a total of 773,200. 773,200. The next transaction should be on 28. And on 28th, received 5,000 units at 30.5 per unit. So we record that transaction on 28. 5,000 units. Each unit is 30.5. Now that will give us a total of 152,500. So we have 152,500. And let us update our balance as we have been doing by adding 5,000 to 22,400 so that we get 27,400. And also add the amount so that we have 773,200. You add 152,500. 152,500. So that you're going to get 925,700. 925,700. Right, that is true. Now, once we have that, then we are now set to go to the next transaction. We are set to go to the next transaction. And the next transaction that we have in this case is a transaction on 29. And on 29, as you can see, is an issue. So on 29, there was an issue of 9,000 units. So we will record here 9,000 units. But then the 9,000 units are issued as follows. Allow me to, we will record here 9,000 units, which are issued as follows. We begin with the previous batch where we had 6,000. And in that batch, we had issued 2,400. We are remaining with 3,600. So we start by issuing 3,600 first. Issue 3,600 at 32. And 3,600 at 32 will be 115,200. So that we're going to have 3,600, which should be subtracted from the total number of units, which is 27,400, so that we remain with 23,800 as the balance of the units of the units in the store. But then you also need to subtract the total amount of 115,200 from the previous amount, which was 925,700, so that we are going to remain with 810,500. We still need to issue more units, and the next units we are going to issue are then coming from this batch of 8,000, which came at 31,000, which were received at 31 shillings each. So we issue from there. After issuing 3,600 out of 9,000, we still need to issue some more units, which are equal to 5,400. So we issue 5,400 at 31. 5,400 at 31 equal to 167,400. 167,400. Now let us calculate the balance by subtracting 5,400 from 23,800. The remaining balance is 18,400. Also subtract 167,400 from 810,500. So that you have 643,100 as the balance. That is about the issue on 29th. And once we issue on 29th, we proceed to issue on 30th. There's another issue on 30th where we issue 5,000 units. Now to issue 5,000 units, we issue the 5,000 on 30th. Then we say we want to issue 5,000 units. We want to issue 5,000 units. But then the previous batch where we had issued some units before, we are only remaining with 2,600. From this batch, we have 2,600. Right. So we issue those units first. Issue 2,600. 2,600. Each is issued at 31. So we have 2,600 multiplied by 31. And that will give you 80,600. Deduct from 18,400, subtract 2,600. So that you have 15,800 as remaining. Also deduct from 643,100, deduct 8,600, so that you will have 562,500. 562,500. But because we need to issue 5,000, we have only issued 2,600. We go ahead and find the next batch where we have 1,000 units. Issue 1,000 units at 30 each, so that we're going to have 30,000. 30,000 and subtract so that we have 14,800 at this point. And here we have 532,500. Until now, we have issued 3,600. We still need to issue 2,000 more, which we can issue from this batch of 10,000 units. And from that batch of 10,000 units, if we issue 2,000, we are going to issue not 2,000, we issue 1,400, which are issued at 28. 1,400 issued at 28 will be 39,200. So subtract 1,400 from 14,800. 14,800 minus 1,400 should be 13,400. And 532,500 minus 39,200 should be able to give us 493,300. Right, so that is the last transaction. So we have determined, until this point, we have determined the closing stock, whereby the closing stock for this month of the month of September 2018, this is the closing stock. The closing inventory is 13,400 units, which are equals to 493,300 shillings. The opening stock for this particular month was equal to 7,000 units, which are equals to 189,000. To determine total purchases for this month of September 2018, we will have to determine the total for the receipts, the total amount for the receipts. And that is this column, the total for this column, the total amount for the receipts. The total for this column, this is the total purchases for this month. So the total for this column, 1,202,500. From the question, we were asked to prepare the income statement for product JL40 for the month of September 2018. Let us therefore prepare the income statement for that particular product. The income statement, this is the JL40 income statement for September 2018. Begin with sales, and total sales is determined as follows. The amounts sold were 10,000 multiplied by the cost per unit, which is 40, plus 3,000 multiplied by cost per unit, which is 42, plus 6,000 multiplied by cost per unit, which is 41, plus 9,000 multiplied by 40, plus 5,000 multiplied by 40.5. The total is 1,334,500. That is the total sales for that period. Now we're going to start with the sales, which is 1,334,500. 1,334,500 less return inwards. There was return inwards of some 1,000 units, which was sold on 15th. And on 15th, they were sold at 42. So 1,000 sold at 42. That was a total of 42,000. That was return inwards. So out of that sales, we need to subtract return inwards, which is 42,000. So that we're going to remain with the net sales of 1292,500. From that, we less cost of sales consisting of the following: opening stock or opening inventory, which is equal to a total of 189. Total of 189,000. That is the opening inventory. So opening inventory is 189,000. Add sales, add purchases, add purchases, add purchases, 1,202,500, I have used the purchases of 1,202,500 because they return inwards, which are the goods, which were the goods returned, have already been included in the closing stock. So once I subtract the closing stock, I shall have subtracted also the value of those goods. So then I subtract closing stock. And the closing stock is including the value of those goods in it. So the closing stock is 493,300. This included the 30,000, which is the value of the goods which were returned. Therefore, I don't need to subtract the value of the goods which were returned from the purchases because they have been included here. We now have 189,000 plus 12,002,500 minus 493,300. And that should be able to give us 898,200, which now is the cost of sales, which we need to subtract from 1,292,000, which we need to subtract from 1,292,500, so that we are able to get a gross profit of 394,300. 394,300. From 394,300, we need to less operating expenses. We need to less operating expenses. And we are told from the equation that the operating expenses for the month of September were 250,000. So subtract 250,000. So that we're going to remain with the net profit. This is the gross profit. So if we subtract operating expenses, then the net profit is going to be a total of 144,300. 144,300 is now the net profit for this particular question. And that is the income statement. This income statement has been constructed directly from the stores ledger card, which we have prepared using FIFO method. So this question, therefore, has a dimension of letting us know how to prepare stores ledger card, as well as combining it with the concept of preparation of the income statement or the statement of profit or loss, which you can see that we have been able to prepare.